I have a very urgent video for you. If you want to make a ton of money, I have a lot of updates on stocks that I'm trading, as well as some very important sell signals. So stocks that I think you should be cutting. I'm going to give you some very important and new information. Let's get right into it and not waste any time. Let's start off with PLTR. PLTR stock is running. The stock is currently sitting at $131 per share. Over the last 1 month, it has had a really good return of 6.8%. The last 6 months, the stock is up 87%, and the technicals are looking very good for PLTR stock right now. I'm going to go to the chart, and I want to show you a very important metric that I am looking at, which is essentially that PLTR is above the moving average, well above the moving average, and the momentum is only continuing on PLTR. So if you hold PLTR right now, if you're holding the stock, you're about to get flooded with more cash. I see the stock going to $150 per share. Now, I need to talk about the good and some of the risks with PLTR as well, because I'm running the wheel strategy. That's what I teach in my Discord community, and we're making an absolute killing. However, there is a lot of disagreements on Wall Street. Wall Street is completely confused on the stock, and there's many analysts that basically the median price target for PLTR is only $100 per share. So based on the views of 28 analysts who followed the company, that really suggests that there's downside on the current price target. That's what Wall Street thinks. They think the stock is worth $100, and over the next 12 months, that would basically indicate that we're going to be losing value on PLTR. And only 6 of the analysts have given the stock a buy rating. So 6 out of 28 analysts. So why are analysts on Wall Street so confused on the stock? Why are they so off? And why did they see a 20% downside? Well, let's talk about this. Well, there's something important that you need to understand. As a software company, PLTR exhibits extremely strong operating leverage. Okay, with its rapid revenue growth fueled by US corporations, its adjusted operating margin expanded to 44% in Q1 2025, and that was up from 24% in the first quarter of 2023. They are growing absolutely fast and faster than last time. Now, its growth isn't expected to slow down anytime soon. Management increased its guidance for 2025 alongside its first quarter earnings release, and it now expects revenue growth of 36% and to maintain that 44% operating margin for the full year. And specifically, all of that is good. So what is bad? Well, the bad is the PE ratio is very high, okay? That is the only reason. Now let me explain it to you this way. If everything is absolutely superb, everything is going according to plan, growth is absolutely astronomical, and the only problem is a high PE ratio, you don't really have to worry too much with PLTR. And I'll tell you why. If you look at Amazon or Tesla when they were growing, I will remind you that Tesla had a 1,000 PE ratio, okay? The reason why companies can have very, very high PE ratios, like exceptionally high, is because they're going to grow into that PE ratio given their expanding margins, given the growth. And PE ratio, for example, can drop down, like for PLTR. I'm going to show you how fast the earnings are going, because if you understand that earnings can grow multitudes faster than revenue, then basically you don't have any issues at all, because the PE ratio is going to have and continue to go down very, very fast. Okay, so look, the PE ratio is 500 and it's actually going up. Do you think investors are really stupid? They're not stupid, okay? The reason why this is going up is because the expectation is that PLTR is only getting better. PLTR is getting a lot better, and the valuation looks stupid on paper, but investors are not stupid, okay? People putting a lot of money to work know what they're doing. They have lots of experience. So the reason why this company is so high, you can actually see the price to earnings growth ratio is somewhat reasonable, okay? It's not out of the ordinary like 10, it's at 4, all right? So when you take into account the high price, but you take into account the actual growth, it's actually looking all right. So look at the revenue, $3.12 billion. Revenue per share is 1.36, which isn't that high compared to the current price of the stock. But once this is like $10, which will happen in the not so far future, then this stock is going to be okay. And you can see how nobody even dares to short PLTR. People are just pissing their pants. Like hedge funds are afraid of shorting it because they understand that there's actually value underneath the company. Plus the company has a ton of cash, basically no debt. The CEO went to my high school. I love the CEO. He has a great vision and they have a lot of operating cash flow. Let's move on. Let's go to HIM stock. I want to talk about HIMs. I think Palantir, I think the story is pretty clear. Like analysts just kind of don't really understand, or I think they're kind of delayed. That's why they have a $100 price target. Now let's go over to HIMs. This is a stock I've been recommending for a long time, and I have something kind of special to tell you later on in this video. At the end of this video, I have a student that I want to share his story with you. But HIMs over the last 6 months, double, crazy results. Year to date, you're getting rich off this stock. You're getting real money on this stock. Now, I will caution you though, I said stocks that I'm selling in this video, and I would say that if you've been following me, congratulations. You've multiplied your money many times. But right now, as HIMS reaches all-time high, which is $68 per share, I'd be taking profit and taking some money off the table off of HIMS, okay? I have more stocks that I want to buy, but one more stock that I'm a bit bearish on. The next stock is going to be Google. So I'm a bit bearish on Google stock right now. And Google is a company that I've been very bullish on for a very long time, specifically because of YouTube. So you're watching this YouTube video right now. I think YouTube is a very strong video platform and it's growing, and I love to see creators providing value. But Google search engine is under attack. Google search engine is under attack with ChatGPT, and I don't think that their search business is going to do that well. So I am rotating some money from Google into the stocks that I'm going to cover more in this video, and I'm going to give you a leap option play as well pretty soon here. But a report from Apple's Eddie Q in early May basically said that searches in its Safari browser for Google are down due to increased use of AI chatbots like ChatGPT. So Alphabet pays, by the way, Apple $20 billion a year for the right to be its default search engine in Safari. So they're paying money, kind of like bribery there in a way, but they're paying Apple money, and if the search business goes down, they still have a big fixed cost. So I think there's a little bit of risk on Google in terms of its performance for its search business, which is a huge part of the business in general. So I'm not that bullish on Google. I think that the stock is going to hold steady, but over the next 3 months, I kind of expect no performance at all, like basically sideways action. But I wouldn't be too bearish on Google because in the long term, they are implementing new AI features into its core search product. And Google is a really big deal because they're doing business with NVDA. Google, part of the AI infrastructure play that NVIDIA has is Google. They're buying chips. All Mag 7 stocks are basically purchasing and spending money on AI. So the AI features in its search product are something to look forward to down the road. And its Waymo business is seeing strong momentum as it expands into autonomous vehicle ride-hailing services, which is why I'm bullish on Tesla as well. So we see autonomous vehicles just really doing well. Waymo had 250,000 rides per week. Okay, so we'll talk about Tesla in a moment. I want to move into AMD because I'm bullish on NVIDIA and AMD. Both are really good stocks. So if we look at AMD here, I'm going to open up AMD. I'm going to show you like an option position. But in general, you can buy stocks you can just buy and hold on AMD. A lot of people thought that, I'm kind of crazy for recommending it. And it had a lot of volatility. But at the same time, if you would have bought AMD at 78, you'd be so freaking loaded right now. You wouldn't even be watching this video. You wouldn't be going to your job. If you would have bought leap options anytime in April, like literally anytime in April, right now, you'd be swimming in freaking cash. You'd be having a stack of cash. You'd be like, bro, what do I do with this? I have too much money. Okay, so AMD, if you look at what has happened in the past 3 months, it's only 14% with lots of volatility, 14% in the last month as well. I think this presents a really good opportunity for just jumping into leap options. AMD is a volatile stock that also is getting some of the AI market. Like, just being honest, NVIDIA has been the leading AI chip supplier for data centers, but it can't control 100% of the $500 billion opportunity. Like, do you understand $500 freaking billion? Like, do you understand how much money that is? Okay, so you can have a little piece of that by jumping into AMD, and there's also growing demand for AMD chips. Like, they're just growing demand across the whole board. So if you look at the technicals on AMD, they're looking pretty good to me. So in the first quarter, AMD's revenue, they did fall 3% over the previous quarter, but it soared 36% year over year. So the long-term picture is still looking pretty good, and it's driven by data centers and strong demand for its Ryzen processors for PCs. So PCs are still using AMD, all right? Now, the high margins from data center chips contribute to a robust 55% year-over-year increase in adjusted earnings, which shows the company can still drive tremendous growth even when some of the segments are experiencing weak demand. It's fine because the core business is still doing absolutely peachy good, all right? So the data center momentum makes the stock a compelling buy, and that's the most important piece of the business. There was recently more than 30 computing workloads launched using its 5th generation EP YC Turin chip across the leading cloud providers. And that includes Alibaba, Amazon, Alphabet, Google, and Oracle. So all the biggest companies, they're still using AMD. So look, what I would do, simply go for an option that expires 360 days out, a leap option. So that's June 18. And here, if you buy a leap option, let's say we're going to go for the 100, our break even is 131. If AMD goes to 162, for example, you'll be $62 in the money. You're paying 31. You can double your money in 1 year. So doubling your money in 1 year, obviously better than every single investor and hedge fund out there. So it's very compelling to look at a leap option on AMD for June 2026, holding a leap option like this. You know, don't do it in big quantities, maybe 3% of your portfolio, but you get that 3% to double up. I mean, big results right there, right? So let's move over into NVIDIA. NVIDIA is a stock that obviously I've been very bullish on, and before earnings, I'm happy that you guys watched my video. The video got a lot of views. I also got some new subscribers from making the NVIDIA video before earnings, and I'm happy to see you guys get rewarded. You guys that subscribe and watch those videos that I make are getting rewarded with money, okay? You're making money off of the videos that I'm making and the knowledge that I'm giving out here. And I'm happy to see that. So NVIDIA, I said, we are going up. I said clearly with conviction, we are going up. So my challenge, which has just recently ended, I'm gonna share with you a story at the end of this video with a student, his perspective on what he's been trading and his wins later on at the end of the video. But we made a lot of money on NVIDIA. I'm still bullish on NVIDIA. I believe that NVIDIA is going to do well because if you look at Blackwell, I don't really care that they don't have access to China. We already know the world's corrupt. We already know politics is all about money. We know food's about money. We know everything's about money, okay? And I think that China, Mr. Donald J. Trump, I think they're going to be doing some business, all right? When it comes to money, the path is pretty clear. NVIDIA will eventually do business with China, or the chips will kind of get into Chinese hands somehow, okay? So I'm not really that concerned. NVIDIA is facing a substantial hit right now due to new export restrictions that curb its chip sales to China because, of course, you know, America versus China right now, we kind of got that battle going on, but these measures are expected to cost the company a lot of short-term money. Yeah, for sure. $8 billion in lost revenue in the second quarter alone. All right, that's a lot. $8 billion. So NVIDIA emphasized that its H20 chips had been available in the Chinese market for over a year, but it was given no transition period to offload existing stock. So they've had a bit of a write-off and some expenses. And in the first quarter, NVIDIA earnings of 4.6 billion came from H20 sales. Okay, 4.6 billion entirely before April 9, and then they recorded a 4.5 billion charge related to the situation. So it notes that Chinese revenue would have reached 7 billion for the first quarter, were it not the restrictions. All right, so we've lost billions of dollars as investors because, you know, the government in the United States doesn't want to, you know, help out China, all right, and sees it as competition. But the money is too big, all right? So I think there's going to be something done. Mark my words, there's going to be something done. Right, NVIDIA will dominate the $50 billion Chinese AI market. It is a fact. Without even selling a single chip to China, it's going to make a ton of money. So NVIDIA has urged policymakers to reconsider, arguing that cutting off China only strengthens international rivals. And NVIDIA points out that China already possesses AI capabilities anyways. They have 50% of the researchers, by the way, and they have the capacity to produce its own AI chips. So why not make money? They're going to do it themselves kind of anyways if we restrict them for too long. And they basically warn that Chinese AI accelerating market is on track to grow $50 billion. So this is what we're missing out on in terms of domestic revenue, domestic innovation and expansion in America, really, by not selling to China. So it's kind of funny with all this, you know, politics stuff. The whole world's kind of connected. So we might as well all make money together rather than restrict and tariffs. I mean, I don't know about all that, right? I don't think it's the best strategy, really. I mean, we're only hurting ourselves at the same time, right? So, but despite these hurdles, NVIDIA projects fiscal Q2 revenue of roughly $45 billion, a 50% year-over-year increase, thanks to largely to surging demand for its next generation Blackwell chips. So if we look at NVIDIA, again, I said this is a great company, and I want to talk about the valuation in just a moment, but it's a great company. I mean, look at it. This stock has done incredibly well. It's made investors millionaires. It's made all the employees at NVIDIA certainly millionaires. And this is a stock that I've been promoting. I don't get paid to promote it. I like it. And I think that when I make obvious plays that make a lot of money on YouTube, people join my Discord community. I like building a community. I also like coaching. So I think it's just been a no-brainer for me to talk about NVIDIA all the time in all my videos because it continues to make money, it continues to go up, and if you like money, you should like NVIDIA. Like you don't even have to have 100 IQ to understand this, okay? AI is growing like gangbusters, all right? Blackwell was a major force behind NVIDIA's Q1 performance, making the company's fastest product ramp in all of history. All right, so data center revenue soared by 73%, with Blackwell contributing nearly 70% of compute-related income in that segment. The company also highlighted growing demand for AI factories, large-scale data centers built using its entire suite of hardware and software. And NVIDIA reported that close to 100 of these facilities are now underway, and double that figure from a year ago. Okay, so if you have any arguments to why NVIDIA is not a good company, let me know. But the valuation, which I want to talk about, is also so freaking good, it's going for like a value stock. So despite the big advances, NVIDIA is only trading for roughly 29 times projected profits over the next 12 months. 29 times is like not that far from S&P 500. And S&P 500 has a bunch of banks, utilities, slow-growing stocks, slow-growing healthcare. And then you're telling me NVIDIA is the same practically? Makes no sense. So it makes no sense. The valuation is just too good, right? By contrast, the NASDAQ 100, by the way, the entire NASDAQ is priced at 26 times. So NVIDIA is basically trading for the benchmark rates. Now, the stock's PEG ratio, a measure of valuation relative to growth, is under 0.9, by far the lowest amongst the Magnificent Seven stocks. So I sometimes get questions, why aren't you covering, Amazon all the time? Why aren't you covering Google and Meta all the time? Well, I believe that NVIDIA is more compelling of an investment. I just believe it's more compelling of an investment, although I will talk about Tesla, I think is also a very compelling investment. And also, one thing I want to point out is that if you look at the overall market right now, there's actually a retail mania of zero DT options, and they're basically propping up the market a little bit artificially. So I'm looking for value plays, and because of all this volume in the market from retail traders, I think there's pockets of the market that are increasingly a bit dangerous. Like over 60% of S&P option volume is now zero DTE, or 0 days to expiration. And by the way, I have zero DT options myself. I think that this is something that I'm teaching in my one-on-one coaching. I've been doing very well by selling, like I have a QQQ expiring today, 520 sold put. I've made money 9 times in a row by doing zero DT options. But I do think that they're a little bit increasing the risk in the market. I personally only invest in the stocks that a lot of them I talk about on YouTube, and then the other half I talk about privately in my Discord with my members. So these are the stocks that I believe in, and that's why I cover them so much, right? And if you look at the market in general, I think that we're still going to be in a bull market this year. So we've looked at the market pulling back, and I've gotten comments saying, Henry's an idiot. Henry, you're a mother effer because the market went down. Dude, I can't control the short-term market, but I was right on the long term. I've been right for the past decade, man. Or 5 years, actually. 5 years on YouTube, but the last decade in my personal portfolio. I can't predict the short-term market, but long-term, I'm right on the freaking money every single time in the long term, okay? It's been since IPO on Palantir. And when I look at why I believe the market's still bullish is I don't think we're in the euphoria mode. I really think that there's a lot of earnings growing. So we're kind of in an earnings super cycle. And the reason is that the rally it's that we're getting is really grounded in earnings strength and not like fluff, okay? Unlike COVID bull run where we were giving out stimulus checks and kind of printing a lot of artificial money. Right now, we're kind of trying to do the opposite. We're there's some programs cutting funds, and we're not stimulating the economy as much, yet the economy is still doing good. So we have a healthy economy. Although it's not perfect, and I know there's a lot of jobs being displaced, the job numbers are actually pretty good. So I'm pretty bullish on the market in 2025, and I think the second half is going to be absolutely amazing. So I'm long SPY. I'm also bullish on QQQ. All right, so I'm bullish on QQQ. I'm doing the zero DT strategy myself, which I do have a video on my channel, but I can make another video here for you guys if you're interested. Now let's move over into Tesla stock. So Tesla is a company that I'm also bullish on, albeit it has had a very big short-term rise. So I'm exercising more caution on it now that it has recovered so much. But a lot of my members that hold Tesla have seen a dramatic rise in their share value and their portfolio value. So year to date, the stock is still down, and I believe we're on track for $400 by year end. So there's still room to run for Tesla, not a whole lot of room. It was great value here. Like there was a double bottom pattern. So technically, the psychology in the market's crazy. crazy because a lot of the stocks that pull back and investors get fearful and sell are actually the best opportunities to purchase. So you see here in April, we've had an incredibly low price on Tesla, and April was a very big opportunity to buy. But if you've missed April, I still think we have some more room to run, and we'll reach these $400 levels again by year end. So the market isn't designed to make you money, really. The market is designed to take your money, actually, not to make you, to take from you. So if you don't know what you're doing, then yeah, you're gonna invest at the higher levels of euphoria, and then you're gonna end up selling here. And that's what I see a lot of investors doing, which is why if you're new, I really suggest that we do some type of coaching together, because I hate to see people not invest in themselves and then just pay tuition to the market. You know, it's just being kind of funny about it. I'd rather you pay me a little bit than pay the whole market all of your money and pay your tuition to the market. When I take a small amount and I put in my one-on-one time with you, it's much better for you, trust me, okay? Because I've been through this for many years now. Learn how to do this stuff and find a reputable coach, which I believe I am. I've been doing this for a very long time, very successfully. And I think that we'll see some more room with Tesla, but it would have obviously been much better. And if you've been watching my videos, I hope that you've been profiting off of Tesla. Let's move over into ACHR. So I want to go into my ACHR position. So ticker symbol ACHR. I have a very interesting strategy on ACHR right now. I actually have something that I call, well, it is called the covered strangle strategy. It's very simple. It's basically you're selling puts and you're selling covered calls at the same time. So I'm selling puts and covered calls at the same time on ACHR. I have the $10 sell put, and we're right around those levels, right? Even today, we kind of opened up above. Well, it was pre-market. We're basically right at $10, okay? So I may get a sign, they may not. You know, I'll update you on how I'm managing the strategy and how this works out, but it's been going very well. I made good money on ACHR. I'm up $13,000. I have some covered calls, some sell puts, and I'm just basically capitalizing on selling options. And look, if you look at ACHR's business, they have robust funding with over $2 billion raised recently, okay? This is some big news, actually. People, they don't follow the stocks that they hold, but I'm following them, and it includes, ACHR has recently had a $300 million investment led by BlackRock. Okay, BlackRock, one of the biggest companies in the world, right? Kind of evil company in some ways, but they know how to make money, so they invested a lot into ACHR. And if you look at the analyst outlook, analysts maintain a positive outlook with average price target ranging from essentially $10.92 to $12.50. So even the most bearish analysts still have baked in a bit of growth into the company. Whereas I personally think that this is a $15 stock in 12 months. And if you think about it, you're like, 15's not that much. It's only 10. Man, dude, $15 compared to the current is 10. That's 50%. 50%. Like, what can that do for you? If you have a 30K portfolio, you make $15,000. If you have $100,000, you make $50,000. If you have a $250,000 portfolio, probably making more money than you do at work with $125,000. Maybe not, right? I have a lot of doctors, engineers, lawyers, which, by the way, if you're a doctor, engineer, or lawyer, I would love to help you. I'm working with many doctors, dentists, lawyers, with busy professionals. I don't have that much time teaching them how to create passive income without having to work too much, right? Because it is hard being those professions, although they're well paid, it can be difficult. So it's good to have a secondary source of strong income. And I have many dentists that they're just like, hey, I'm tired of being bent over doing those teeth. I'm just trading options now 2 hours a week. I'm good, right? All right, so let's move over into SoFi stock. So SoFi has a record Q1 financials. In the first quarter of 2025, SoFi reported a record net revenue, $772 million, marking a 33% year-over-year increase. Adjusted EBITDA rose 46% to $210 million, and net income reached $71 million with earnings per share doubling to 6 cents compared to the previous year. Company is doing great. I've talked about it many times. Look, not to make the video too long, you know what I like about SoFi is the funnel. It's called a funnel. For you older guys that don't understand, a funnel is basically where you get some attention and then you convert that attention into money. And SoFi is the best in the world at doing that because they have just the best marketing, they have the best sales, and the company added 800,000 new members in Q1, bringing in the total members to 10.9 million members, a 34% increase year over year. And additionally, SoFi also introduced 1.2 million new members to products. So now they've got more people consuming more products, which is just honestly a lot more money and really can't hate on their sales, their marketing. I just love it. Honestly, I just love it. I love what they're doing with it. Looking at the tech giants and QQQ, I think that we're in for some really interesting times, and we see companies such as Apple's AI developer tools and Tesla's robotaxi service in Austin. We see a whole lot of innovation in the market. I'm very excited for the big tech. Okay, this is not good for the ordinary person, but big tech is making a lot of money, and if you're invested in big tech, at least, even if you are an ordinary person, at least you're not getting poorer relatively. You're getting richer because all the money's going to the big tech. They figured it out, so you might as well invest in them. Now, I wanted to talk a little bit about some of the results one of my students, Eric, got. I want to show you a quick video. It's a minute and 30 seconds, and he's had a really good experience with my one-on-one coaching. And right now in June for the summer, I'm offering some discounts on one-on-one coaching, and I would love to coach you and get you to the next level. I want to have more testimonials because I love what Eric had to say, and I was just so happy and pleased to see him give me such a good testimonial of him traveling and him being able to trade and get a good income. So watch this quick video and click the first link in the description if you want some coaching with me. I'd love to basically help you. I don't even have any words. I love seeing more stories like this.
Well, hello. Kind of hard to see me here, but let me turn on some lights. I am checking out the Northern Lights, or at least attempting to, but I had to congratulate you, Henry, for the picks that you made with Hims, Sweet Green, and Costco earlier in the day. And here's some better lighting, I guess. And yeah, just incredible. Like, you've been watching what we need to see and looking for breakouts. Made a little over $6,000. It was equivalent to about 6% in a day, which is extremely rare for an investment like that. Obviously I did it with a percentage of my portfolio, maybe about 10% or so. So, no over leveraging, no over risk, just buying the stocks outright. The Palantir play, selling puts, that did really well as well. Just really looking out for all of us so we can do things like this, be way the heck out in the middle of nowhere and checking out the non-Northern Lights, being able to enjoy life and doing things. Oh, here they are. No, just this. This is all I got. That's the furthest I can see a Northern Light. But yeah, being able to do stuff like this and enjoying yourself at 1 a.m. when you don't really have to worry about getting up at work, trading from my laptop in the middle of nowhere. Cheers.